Okay, let's unpack this. $84 billion.
Yeah.
That's the, well, eye-popping number we're hearing around strategy. That's MSTR, right?
MSTR, yeah.
And they're just announced, like, turbocharged Bitcoin expansion plan. That almost sounds unreal.
It does, doesn't it? A publicly traded company making such a massive bet on a digital asset.
Exactly. So today on the deep dive, we're really zeroing in on what Wall Street actually thinks about this.
Yeah.
It's an audacious move. We're using a recent article that gives us a good look at the analyst reactions.
And what's really fascinating, I think, is the level of confidence, or apparent confidence anyway.
Right.
Because, you hear $84 billion Bitcoin expansion, and your first reaction might be, whoa, is that even possible?
Totally.
But the analysts, they seem to be looking at it, well, differently. And understanding why they're so supportive, that's what we need to get into.
Yeah, absolutely. So Strategy's put out some pretty significant new goals. What exactly are these targets that have everyone talking?
They've definitely raised the stakes significantly. The article lays out their revised goals for 2025. They're targeting a, get this, 25% Bitcoin yield?
25%. Wow.
And something like $15 billion in actual BTC gains.
$15 billion in gains. And how does that compare to like what they were saying before?
Well, the old targets were already pretty bold,
Yeah.
A 15% yield and $10 billion in gains. So quite a jump.
A 25% yield on Bitcoin.
Okay, what does that actually mean for a company like Strategy? Is it just hoping the price goes up, or?
It's likely a mix of things. Price appreciation is definitely a huge part of it, you'd assume. But it could also involve, strategies to boost their Bitcoin holdings through operations, maybe investments in the ecosystem. It's not like a dividend yield, obviously.
Right.
It's more about the targeted increase in their overall Bitcoin position,
Yeah.
their total BPC assets.
Got it. So a big step up in accumulation and expected value. And this connects to some pretty huge fundraising plans, doesn't it?
Oh, absolutely. Their first plan, the 21-21 plan, aimed for $42 billion. Okay.
Now they've basically doubled that target to $84 billion total.
Right.
They've already pulled in $28.3 billion under that first phase.
Right.
And the goal now is to raise another $56.7 billion over like the next 32 months or so.
56.7 billion more. That is a serious amount of capital they're aiming for.
It really is.
So with numbers like these floating around, what's making Wall Street seem, well, comfortable with this? The article points to some positive ratings from respected firms.
Yes, exactly. Benchmark and TD Cowen both have come out and reaffirmed their buy ratings for Strategy.
Yep.
Mark Palmer over at Benchmark, he's got a $650 price target, and Lance Vitanza at TD Cowen is backing it with a $550 target.
Those are pretty strong signals, votes of confidence from people watching closely.
Definitely.
Okay, so let's dig in a bit. What's the core reason for their optimism? What are they seeing that makes this, $84 billion idea seem not just feasible, but maybe even smart?
Well, Benchmark's Mark Palmer, he points to Strategy's first mover advantage. His argument is basically that as more companies even start thinking about Bitcoin for their treasury, Strategy's already there. They're established. They have the infrastructure. It gives them an edge, he thinks, in actually acquiring Bitcoin effectively as they scale up. He even sees their whole treasury operation as a key driver of shareholder value. And this is interesting, even with the stock trading at more than double the value of the Bitcoin they actually hold right now.
That first mover advantage point is interesting. But I mean, being first with such a huge bet in something as volatile as Bitcoin, are there downsides maybe being overlooked?
That's always the question, isn't it? Being first means you learn early, you build the pipes.
True.
But it also means you're kind of navigating fog, uncertainty, potential regulatory changes. There's no clear path someone else has already walked.
Right.
And the volatility itself, it offers that upside, but the risk is huge too, especially with such a large position. Any swing gets amplified.
For sure.
But it seems the analysts feel Strategy's experience kind of offsets some of that risk, or at least makes it manageable.
Interesting balance. Okay, what about TD Cowen's angle? They apparently use the word aggressive. Which, seems fair.
Yeah, Lance Vitanza at TD Cowen did call it aggressive, but crucially, he followed up with, but by no means out of the question.
Okay, so aggressive but doable. What's their reasoning?
Their thinking seems more grounded in like the company's sheer size and market presence. Strategy has, what, $111 billion market cap? And its shares are incredibly liquid. The average daily trading volume is like $5.6 billion.
That's a lot of trading.
Right. So TD Cowen seems to think the market can actually handle the amount of equity strategy plans to issue without, crushing the share price. There's enough capacity there.
Okay, so it's a mix. Strategies, position, market capacity. Now, the person really driving this, Michael Saylor, big Bitcoin believer. The article mentioned his comments after the earnings call. What's his take on this bigger plan?
Oh, Saylor's conviction is absolutely fundamental to this whole thing. He talks about the adoption of the Bitcoin standard by more and more corporations.
Right, he's been saying that for a while.
Exactly. He believes that as other companies put capital into Bitcoin, it doesn't just legitimize Bitcoin as an asset. It actually attracts more investment, which he thinks will stabilize the price and ultimately push it higher.
Interesting.
He even talks about competitive pressure. Like, companies that don't adopt some kind of Bitcoin strategy might actually get left behind down the road.
It's a bold vision, positioning Bitcoin adoption as like the next step in corporate finance. But okay, issuing potentially tens of billions in new stock to buy Bitcoin, isn't there a real risk of dilution for existing shareholders? That's usually a big concern.
It's the classic concern with big equity raises, yeah. And the article does touch on CEO Feng Li's counterargument.
Okay.
He argues that if they issue equity when their market value is significantly higher than their net asset value, basically, when the stock trades at a premium to the underlying assets,
What?
then it's actually accretive, not dilutive.
Accretive, meaning it adds value per share, not reduces it. How does that logic work here? Can you break that down?
So the basic idea is this. If Strategy's market cap is, say, double the value of the Bitcoin it holds, they can issue new shares at that high market price. They get a lot of cash for relatively fewer new shares.
Okay.
Then they use that cash to buy more Bitcoin, which they firmly believe will go up in value. So the total value of the company increases faster than the number of shares increases. That's the accretive part. Feng Li even used this analogy, saying that as their market cap to net asset value ratio, the MNAV, goes up, issuing equity starts to feel more like issuing fixed income, like they're tapping into that premium.
That's a really interesting way to frame it. Using that high market perception to acquire more of the asset you believe in. It's definitely a bet, though. Hinges on market sentiment staying strong and Bitcoin performing.
Absolutely. It relies on those factors holding true.
Now, speaking of performance, the article also brought up a pretty big loss, didn't it? Like $5.9 billion unrealized loss in the first quarter because Bitcoin's price dipped. How do they handle that kind of volatility?
Yeah, that's the reality of fair value accounting rules. If you hold Bitcoin, you have to report those paper gains and losses each quarter, even if you have no intention of selling.
Right.
So CFO Andrew Kang acknowledged that $5.9 billion unrealized hit, but he framed it as necessary transparency.
Okay.
And he basically reiterated that they expect these swings and they anticipate more positive swings down the line, aligning with their long-term strategy. They seem to just see these short-term fluctuations as, the cost of playing in the space.
So eyes on the long game. The paper losses now for potentially bigger gains later.
That seems to be the approach. It really shows their conviction in Bitcoin's future, doesn't it?
It does. And even with MSTR stock trading at, more than double its Bitcoin holdings, analysts like Mark Palmer are still calling it attractive. Why the premium? What's the justification there?
Palmer's point goes back to the management team. He credits their demonstrated ability to create shareholder value through its treasury operations.
So it's not just the Bitcoin they have now.
Exactly. The market seems to be paying a premium for Strategy's strategy. Their track record in acquiring and managing Bitcoin, the perceived advantage of their approach, it's about their ability to keep generating value using this unique Bitcoin focus.
Okay, right. So let's try and tie this all together. We've got strategy going for this massive $84 billion Bitcoin expansion.
Huge bet.
Huge bet. And despite the scale, the volatility, Wall Street analysts are, well, largely on board.
Seems that way, yeah.
They're citing the first mover status, market liquidity for the fundraising, and this strong belief in management skill with their Bitcoin treasury. And it's all powered by Michael Saylor's, unwavering belief in Bitcoin.
Precisely. It's undeniably aggressive. You can't argue with that.
No.
But the analyst consensus seems to be that it's a calculated risk, a potentially very rewarding one, even with all the uncertainties of crypto.
So for you listening, this deep dive into Strategy's plan and the fact that analysts are giving it this kind of stamp of approval, it really shows how the view of Bitcoin might be shifting, at least in some corners of finance.
It's definitely more than just speculation for them now.
Yeah, it's being treated as a core treasury strategy by a major public company. Which leaves us with some big questions for you to think about. If you have this level of institutional buy-in, this kind of huge corporate commitment, what could the wider ripple effects be for Bitcoin's future role in the global financial system? What are the potential upsides and the potential dangers for investors, for the market, as this all plays out? Definitely something to keep mulling over.